How do we define Nexus? How should people be thinking about that? Walk us through that part.
So Nexus is defined in two primary ways. One is economic, so that's how your sales have grown over time in a certain jurisdiction and how across the threshold. And you might say, well, what's a jurisdiction? It's not just 50 states. It's actually every county and zip code can have different rules. So some are tracked at the state level, but some are tracked at the county level, and you need to make sure you're complying with both. The second is physical nexus. So that's where an employee is. But oftentimes we get questions, well, what about an independent contractor? What about a PEO style, employee? PEO employees count, absolutely. Independent contractors, it depends. So if I'm like an engineer or a salesperson who's really very involved in the weeds of the business, I would say the answer is it depends, but oftentimes that is the type of employee who even as an independent contractor could trigger Nexus. So there's a lot of ways that you can flip a switch, but the two things to think about is where are my employees and what are my sales in taxable states?
What are the sort of triggers for Nexus? Would it be I have 2 employees or contractors in that state and I've sold at least $100,000 in software this year, and then all software sales over 100,000, over 100,000 is when I'm starting to collect that tax? What are some examples so people can kind of make this more real?
California, like if we're talking a software product, SaaS as a software as a service, there are no transaction thresholds because they don't tax SaaS. New York, they do tax SaaS. And so the two things you have to trigger on an economic side are my sales over $500,000 and am I making over 100 transactions a year? Once you cross those two, then you've tripped it. But there are some jurisdictions where it's just a transaction account. So you actually could have a very small B2C seller who's just selling lots and lots of App Store licenses. And then in others where it's $100,000, which depending on the type of company you are, you could trip in one invoice.
Got it. So, and then once you've hit that threshold, that's when you need to start collecting any transactions or whatever over that number is when you start collecting. In part of the challenge, from what my understanding of the system and how it works, is every state has different rules. And therefore, it's almost impossible without software like Anrock to know when you've hit Nexus and need to start collecting, number one. And then number two, how much to start collecting, because the actual taxable amount is different as well in every state. Is that right?
Yeah, no, it's accurate. So we have 50 states and then, dozens and dozens or maybe even thousands of jurisdictions across the United States with their own rules and regulations. And those vary across each product code. So like software as a service, packaged software, infrastructure as a service, professional services, those are all different tax codes. So the number of data points that it could be, grows into a pretty large data set to choose from extremely quickly. And so if you are, a small team selling one product in one state once a year, yes, you could probably go online and look it up and add it to yourself. But if you're even a small size business, but with multiple products in multiple states, it quickly can turn into hours of work. The other thing though, is if you get it wrong, the risk of audit or unpaid liabilities and penalties can grow pretty quickly. So if I'm a $1 million business, or let's say I have a $500,000 sales tax liability, but I'm growing 300%, which is very common amongst high growth tech companies. The next year we could have a liability in the millions of dollars, and so it pays to get it right from the get-go.